Number 5, problem number 5. Market to book and share price. You are given the following information. Stockholders' equity is 3.75 billion. Price earning ratio is 3.5. Common shares outstanding is 50 million. And market to book ratio is 1.9. Calculate the price of a share of the company's common stock. So what we need to find out is, that is question number 5. Price per share of the company's common stock. We need to find out price per share of the company's common stock. Now the data that is available with us is stockholders' equity is given. It is $3.75 billion. Market to book ratio is 1.9. Price per share we need to find out. So based on this data, this is the data which is available, we can find out the total market value of the shares. That total market value we can find out. We have the number of shares, which is 3.7. The value for stockholders' equity is given, which is 3.75 billion. So 3750, and then we have 6 more zeros. That is the market value of the stockholders' equity. Sorry, this is the stockholders' equity. The value of stockholders' equity is 3.75 billion, and then we have market to book value is 1.9. It means that market value of each share is 1.9. So this gives us total market value of 7125,000. So the total market value of the shares that we have is 7,125,000,000. So now we can find out the price per share or market value per share. Market value per share we can find out by dividing this figure with the number of shares, which is 50 million shares are outstanding. Number of shares. So market value per share 7125 divided by 50 million shares of common stock. 50 million shares of common stock are outstanding. This gives us price per share of 142.50. So price per share, market value of share is 142.50.
earning ratio 3.53. Who's the paying?
Which one?
The question is this a price per earning ratio?
Price earning ratio 3.5. As such, we use it. Just additional information. Okay, now question number 6 is about days sales outstanding and account receivables. Days sales outstanding, what are days sales outstanding? क्या चीज़ है?
Pending account for usage के mature नहीं हुए, they are still outstanding. Credits back.
The number of days it takes to collect your receivables. days required to collect your receivables. Days sales outstanding and account receivables. Okay, question number 6. Days sales outstanding and account receivables. Harrelson Incorporation currently has $750,000 in account receivable, and its days sales outstanding is 55 days. So they are taking 55 days to collect their account receivable. The company wants to reduce its days sales outstanding to 35 days by pressurizing more of its customers to pay their bill on time. If this policy is adopted, the company's average sales will fall by 15%. What will be the level of account receivable following the change? Assume a 365 day per year. So the only thing required in this question that is missing is the total sales. So if we know the amount of total sales, then we can figure out the effect. So in order to find out the total sales, we use the step 1 in this question is find out total sales. So if we can find out total sales, then the problem is solved. So in order to find out this total sales, we can use the formula for days sales outstanding. Days sales outstanding is equal to account receivables divided by sales divided by 365. So that is the formula for days sales outstanding. Now in this, the values which are given, we know the days sales outstanding are 55 days. The value of account receivables are given, which is 750,000. We need to find out the value for sales, so we can take sales as X. This is the unknown value that we want to find out, and then we divide it by 365. So by solving this equation, we get 55x is equal to 750,000 multiplied by 365. So x is equal to 273,750,000 divided by 55. So sales, total sales are 4,977,272.73. So step number 1, we need to find out the total sales, and those sales we worked out by using the formula for days sales outstanding. The total sales currently the company has is 4,977,272.73. Now the question says, what will be the change? The company wants to reduce the days sales outstanding to 35 days, and there is since the company is pressurizing the customers, so obviously there is a chance of decline in sales, and the decrease in sales will be 15%. So with this 15% decline in sales, what will be the level of account receivables? That we need to find out. So if step 1 is clear, then we can move to step number 2. Should we move to step number 2? So sales declined by 15%. So the sales will be equal to 4,977,272.73 0.85. So sales will be 85% of what they are currently. So decline of 15%. 4230681.82. So this will be the new sales. If the company pressurize the customers, the sales will decrease to 4,230,618.82. Now we need to find out the account receivables in the new scenario. So in the new situation, the day sales outstanding are 35. Again, we are using the same formula for day sales outstanding. Account receivable, sales divided by 365. The same formula we are using. Now the day sales outstanding are reduced to 35. Account receivables we need to find out. So account receivable is the unknown figure that we need to work out. 4230681.82 divided by 365. So that gives us average sales. Now further solving this equation, double 1590.91. So the account receivables for 05681.82, or you can say 405682. Approximately the account receivables will be 5,682. 405682 will be the approximate account receivables. If the company decrease the day sales outstanding from 55 days to 35 days. Three, price earning and stock price. Price earning and stock price. Fontaine Incorporation recently reported net income of $2 million. It has 500,000 shares of common stock, which currently trades at $40 a share. Fontaine continues to expand and anticipates that 1 year from now, its net income will be 3.25 million. So net income will increase from 2 million to 3.25 million. Over the next year, it also anticipates issuing an additional 150,000 shares of common stock, 150,000 shares of stock, so that 1 year from now it will have 650,000 shares of common stock. So currently they have 500,000 shares of common stock. After 1 year, they are going to issue 150,000 additional shares. So the number of shares will increase to 650,000 shares of common stock. Assuming its price earning ratio remains at its current level, what will be its stock price 1 year from now? So the price earning ratio will remain same. So we need to find out the stock price, expected stock price 1 year from now. So first we need to find out the current price earning ratio. So price earning ratio is equivalent to earning per share divided by price divided by earning per share. Price of share divided by EPS. Now we need to find out earning per share first, EPS. The net income is 2 million. Earning per share is equal to net income divided by Number of shares. So net income is 2 million divided by 500,000 shares.
$4 per
$4 per share. So earning per share is $4 per share. The price earning ratio, the current price of the share is given. It is mentioned in the question. It has 500,000 shares of common stock, which currently trades at $40 a share. So current price of the share, price of share is $40 divided by $4 is the earning per share. So price earning ratio is 10 times. So this is the current price earning ratio. Now the change will be that after 1 year they are going to issue 150,000 additional shares. So number of shares will increase to 6,50,000. And the net income will also change. Net income will be 3.25 million. So new earning per share will be, the net income is going to increase from 2 million to 3,250,000. Net income is going to increase from 2 million to 3,250,000, and the number of shares will increase from 500,000 to 650,000. 650,000 shares will be there. So based on this data, the EPS earning per share will be $5. Now it is mentioned here that the shares, in the question it is mentioned that its price earning ratio remains at its current level. Price earning ratio will remain at its current level, which is 10 times. So if the shares are selling 10 times earning per share, then they must be selling for $50. So price per share is equal to 10 times of 5. So 10 multiplied by 5 is equal to $50 per share. So after 1 year, we can anticipate that the price of the share will be $50 per share. Okay. So basically the question was about the price earning ratio, and the price earning ratio, the existing price earning ratio comes to 10 times. The changes that are anticipated are that the net income is going to increase from 2 million to 3.25 million. The number of shares will increase from 500,000 to 650,000. So this change will result in the earning per share of 5 per share. So based on our price earning ratio, we can calculate that the anticipated price for the share will be $50 per share. Okay. Next question. Let's see if you can work out that at your own. I'll give you 10 minutes to work it out. You have to fill in this blanks, fill in the blanks. This is a balance sheet given. So you have to calculate the missing figures. You have to complete this balance sheet. So this is basically this thing that you need to calculate. You have missing items and fill in the blanks and वो आपने calculate करना. So let's see if you can work out in 10 minutes. मैं यहाँ पे आपको बैलेंस शीट बना दूँ. क्वेश्चन नंबर 8. बैलेंस शीट कंप्लीट करना है using the ratios. Okay, so Okay. Question number 8. In question number 8, you need to complete this balance sheet using the ratios which are mentioned. So the format of the balance sheet, left hand side is the assets, right hand side is the liabilities and owner's equity. Now cash, you need to calculate the cash. Account receivables, again account receivables are not given. Inventories, the items are missing. Fixed assets, the value need to be calculated, but the total assets, the value for total assets is given. Total assets is 300,000. So on the asset side, only thing that is given is the value for total assets. On the liability sides, accounts payable not given. Account payables, you need to calculate these. Long-term debt is given. Long-term debt is 60,000. Common stock, is not given. Retained earnings are mentioned. Retained earnings, $97,500. So that is the data which is given on the liabilities side. The total of liabilities, and equity. Okay, anyone who has worked out any figure from here? One figure is right away you can work out. The total assets should be equal to this one. So 300,000 should be the value of total assets and liabilities. The accounting equation says that assets should be equal to liabilities and owner's equity. So both sides of the balance sheet should be equal. Now what else you can work out from here? Account receivables using which information?
ESO 36.5.
Okay, let's start with the debt ratio. Debt ratio is given 50%. So this is the information which is given. Debt ratio is equal to what? Debt ratio is equal to total debt divided by total assets. ठीक है, यही बताते हैं ना डेट रेशियो आपको क्या बताएगी कि आपके टोटल एसेट्स जो हैं उसमें से कितने परसेंट डेट के थ्रू फाइनेंस हुए हैं. सो डेट टू टोटल एसेट्स इज द डेट रेशियो. नाउ 0.5 is equal to D is not given, but total assets we know is 300,000. So the total debt should be equal to 1,50,000. So the total debt should be equal to 150,000, and total debt in this should be equal to two things: account payable and long term debt. ऐसे ही है, टोटल डेट में दो चीजें आ रही हैं, एक आपके पास अकाउंट पेबल है जो आपने लोन लिया है और एक आपके पास लॉन्ग टर्म डेट है. तो दीज टू एडेड टुगेदर शुड बी 150,000. सो इफ लॉन्ग टर्म डेट इज 60,000, अकाउंट पेबल गॉट टू बी 90,000. है, ये दोनों ऐड करके आपके 150,000 के बराबर आने चाहिए. सो account payables problem is solved. Common stock can be worked out now. Only one thing is missing. If we add all these three things and subtract from this amount, you will get common stock. कितना आता है? 300,000 minus 90,000 minus 60,000 minus 97,500. So it will give you common stock 52,500. Okay, half done. We are through with the liabilities and owners equity side. Now on the asset side, it is complete empty. So
we can calculate sales of this note.
Sales? Yeah, sales also we need to find out.
We have to find out sales.
Okay.
So we can find out sales by the total asset turnover.
Okay, that's fine.
Total asset turnover will be sales divided by total assets.
Sales we can find out from total asset turnover, which is equal to
Sales divided by total assets.
sales divided by total assets. So
We have the total asset turnover as 1.5.
1.5 is given, okay.
And the total asset is 300,000.
Sales we need to find out and total asset is 300,000.
Count out to 450,000.
Sale is equal to 450,000, okay. So sales we needed to find out and the sales is 4,50,000. Okay, what else? We can find out inventory from the inventory turnover ratio.
Yes, sir.
Inventory turnover ratio,
Inventory turnover ratio is equal to sales divided by inventory.
right. So we have already,
We have the sales.
so inventory we need to find out, right?
We can find out inventory. So
Inventory,
sales divided by inventory turnover.
inventory turnover ratio. It is given that it is 5 times. Inventory turnover ratio is 5 times. So the formula for inventory turnover ratio is equal to sales divided by inventory.
Sales divided by inventory.
Now inventory turnover is 5 times. Sales we have already calculated. 4,50,000 is the sales. Inventory we need to find out. So
90,000.
X is equal to 90,000. So at least one figure we have calculated on the asset side, which is inventories equal to 90,000. 3 more to go. Account receivables. DSO se find out is right. So account receivables can be worked out from day sales outstanding.
DSO is equal to annual sales.
Okay, account receivables we need to find out. So that we can find out using DSO, which is equal to 36.5 days. So this is given, day sales outstanding are 36.5 days. So DSO is equal to account receivable divided by sales divided by 365. Now DSO is 36.5, account receivable we need to find out. Sales we have already calculated, 4,50,000 divided by 365. So account receivables comes out to be 45,000. So account receivables are 45,000. Okay, now I think we can find out cash as well, because the current ratio is given. Current ratio is given 1.8 times. Current ratio 1.8 times. So current ratio is equal to current assets divided by current liabilities. Current ratio is 1.8. Current assets are unknown. Current liabilities, how much current liabilities are there? Only one thing, account payable. So that should be 90,000. Now current assets should be equal to 1.8 multiplied by 90,000. So $162,000. Current assets equal to $162,000. Current assets should be equal to $162,000. So what all are current assets? These three are current assets. Cash, account receivable, and inventories. These three combined are our current assets. So the total of these three should be 162,000. So 162 minus 45,000 minus 90,000, it gives us the value of cash, which is 27,000. Now fixed assets, we can work out 300,000 minus current assets. 162,000 is the current assets. So 300,000 minus 162,000 is 138,000. So the balance sheet is complete.
No, sir, there is still one cost of goods sold.
Okay, cost of goods sold we need to find out. Cost of goods sold, how we can find out cost of goods sold?
Formula here was the gross profit margin on sales.
Okay.
Sales minus cost of goods sold divided by sales.
Okay, so GP margin is given, gross profit margin is there, which is 25%. Cost of goods sold we need to find out. Gross profit margin is given, GP margin. The formula for GP margin is sales minus cost of goods sold, sales minus cost of goods sold divided by sales. So this is how we calculate the gross profit margin. Sales, from the total sales we deduct the cost of goods sold to get gross profit, and that is divided by total sales again. Now we have GP margin of 25%, 0.25. Sales we have already calculated, 4,50,000. CGS, cost of goods sold, we need to find out, 4,50,000. So by solving this equation, we get 5,500, 4,50,000 minus CGS, and CGS is equal to 337,500. So cost of goods sold is equal to 3,37,500. Okay, we are left with only one problem, but that problem is a long problem. So what you can do is you can do it at your home, because there is nothing tricky in this problem. You just have to work out the ratios for Berry company: current ratio, quick ratio, days sales outstanding, inventory turnover, total asset turnover, net profit margin, return on assets, return on equity, and total debt to total assets. So industry average is given. You have to work out the ratios for Berry company, and then you have to just comment on those, that what are the strengths, what are the weaknesses based on this ratio analysis. So if we do it, it might take more than half an hour, so that will be an assignment. Bismillahirrahmanirrahim. Lecture number 5 is about time value of money. In the first 4 lectures, the major emphasis was on financial statements. The major topic that we covered was the financial statements and the analysis of financial statements. Now from this lecture number 5, we are going to move on to another very important area of finance, is when we work out the future values. Like if we are interested to see if we are investing today certain amount of money and we want to know that what will be the worth of that investment at a certain point in future, maybe after 5 years or 10 years. So how we can work out that value. Or if someone is giving us some option that, okay, you invest with us and after 10 years or 15 years, we are going to give you a certain lump sum amount. Now you are interested in knowing that what that future value that he's offering you has worth today. What is the worth of that amount, as if you talk in today's term. So these are some of the concepts which will be discussed in this chapter, that when we want to look into the future, or if some scenario is there in future, we want to see the present situation, how we can work out present and future values. One useful thing in calculating the future values, or when we want to look into the present value of any investment, is to draw a timeline. Timeline is basically a graphical representation of the data. As you can see here, this timeline, the tick marks on the top, 0, 1, 2, 3, these indicate the time period. 0 is present time, 1, it can be 1 year from now, 2 is 2 years from now, 3 is 3 years from now. So that 0, 1, 2, 3 is the time period. Then CF0 is cash flow. The CF0 cash flow as on today. So if what is the cash flow, present cash flow, then cash flow after 1 year. CF1 is cash flow after 1 year, CF2 indicates cash flow after 2 years, and CF3 indicates cash flow after 3 years. And that I% is the rate of interest that is mentioned, that what will be the rate of interest involved in this calculation. So it helps you to visualize the things when you draw a timeline. So it gives you an idea that what you want to see, what actually you want to know. So that is why we draw these timelines. Okay, so if we want to see that if we are investing 100 today, if we are getting 100 lump sum in 2 years time, if we are getting $100 after 2 years, so we can show it on the timeline as it is mentioned here, 0, 1, 2. So 2 is the end of year 2. We are getting $100 at that time. CF2 is $100, and interest percent, it has to be mentioned there. What will be the rate of interest at which we are getting this $100? If it is 3 year, $100 ordinary annuity. Now annuity, what is annuity? The term annuity is used equal payment after equal interval. So annuity is equal payment after equal interval. As in this case, you can see the $100 are there at the end of each year. So $100 is the equal amount of the payment. It remains constant, $100. And after equal intervals mean after each year. So at the end of each year we are getting $100, and it is called ordinary annuity. There are two types of annuities. One is ordinary annuity and the other is annuity due. The difference between the two is, in ordinary annuity, the payment occurs at the end of the period. Payment occurs at the end of the period. That is ordinary annuity. And in annuity due, the payment occurs at the start of the period. So that is the difference between these ordinary annuity and annuity dues. We'll discuss them in the future slides as well, these two types of annuities. But here now, if there is an annuity which is giving us $100, this is a 3-year annuity. So how we can show it, or how we can represent it on a timeline? So that on a timeline you can see 3 ticks are there. So 1, 2, 3 is the 3-year time period. 100 at the end of each year, and then interest percent is the rate of interest that we need to specify here. So timelines are just to give a graphical presentation, just to visualize the data, the data which we are looking into it. Okay, now cash flows can be uneven cash flows. Uneven cash flows are when the payment at the end of each period is different. Here you can see that it is -50 at time 0. At the end of 1 year there is 100 positive cash flow. At the end of year 2 there is 75, again positive cash flow. At the end of year 3 there is 50 positive cash flow. That is uneven. Every time period the payment is changing. So if you want to show it on a timeline, this is how you can show that the different payment is occurring at the end of each different time period. Okay, now what is the future value of an initial $100 after 3 years if interest per year is 10%? So this is how you can show it on the timeline. The problem that we are concerned with is we want to find out the future value at the end of year 3. So this is the value that we want to find out, that is unknown figure. We know that today we are investing $100, but we want to find out what will be the value of that $100 after 3 years if the rate of interest is 10%. So let's see if it is. Okay, so you can use a step-by-step formula to find out the value. Future value is equal to present value 1 plus I. That is the formula that you use to find out the future value. If you are interested in finding out the future value, the formula is future value is equal to present value 1 plus I. Now, if you want to go beyond 1 year, like if you want to see maybe 3 years down the road or 5 years down the road, then you mention a power of n here. This n is the number of years. So if you want to find out the future value of any investment that you are making today, so the amount that you are investing today is $100. That is the amount you are investing today, and you want to find out how much it will be after 3 years if the rate of interest is 10%. So 1 plus rate of interest is 10%, 0.10, and after 3 years means this should be 3, n should be 3. So when you solve it, the value after 3 years you can find out कैलकुलेटर पे करके देख लें इसको कि कितनी वैल्यू आती है. 110, 121, 133, all of these need to be. Okay, it should be 133.10. So this is the formula for calculating the future value. If you want to, that is a future value of a lump sum amount. Said that you have invested a lump sum amount today. The lump sum amount is $100 that you are investing today, and you want to see what will be the value of these $100 after 3 years if the rate of interest is 10%. The opposite of that is present value. So what is the present value of $100 due in 3 years if interest per year is 10%? So you can see on the timeline that how we show it on the timeline. We know the future value. After 3 years we are getting 100, but we don't know the present value. That is why there is a question mark at time 0. Present value is equal to, there is a question mark there, so that we need to find out. So using the same formula we can find out the present value. So the same formula, if we derive present value from the same formula, it will be equal to present value is equal to future value divided by 1 plus I raised to the power n. We know the 100 is the future value, 1 plus 0.10 raised to power 3. 75.13. So if we are getting $100 after 3 years, and the rate of interest is 10%, so the present value of those $100 is $75.13. Okay, so the same thing is shown here. Present value is equal to future value 1 plus I raised to power 3. Okay, as I mentioned earlier, there are two types of annuities. Annuity is an equal payment after equal interval. One is ordinary annuity. Here you can see the PMT stands for payment. So payment is at the end of the year. So at year 1, at the completion of year 1, there is payment in case of ordinary annuity. But if you look at annuity due, the payment is at time 0. So it is at the start of the period. So payment is before the year. Like if you are paying today, then it is annuity due, and if you are paying 1 year from now, at the end of 1 year, it will be considered as ordinary annuity. Okay, now if we want to find out the present value of an ordinary annuity, and it's a 5-year annuity, we are getting $100 at the end of each year. So if you draw the timeline for this, this is an ordinary annuity. So what we are interested in, we want to find out, there are 5 years, so 1, 2, 3, 4, 5, 0, 1, 2, 3, 4 and 5. Ordinary annuity, so payment is happening at the end of the year. At the end of each year, we are getting $100, so it is an ordinary annuity. Rate of interest is 10%. So we want to find out the present value of annuity today. So this is what we are interested in. Now if we want to find out the present value, one method of doing it, which is long method, that you find out the present value of each individual payment, and then you add them up together to find out the present value. But that is that is not a recommended method, because if it is instead of 5 years, it was 50 years, so that it will not be very easy. So convenient method is that we can use there is a simple formula that we can use to find out the present value of annuity instead of calculating each and individual figure. No, this is happening at the end of 1 year, so present value as on today, it will be less than 100. No, we are getting 100, but we want to find out what in today's term how much it is worth today. Actually, they are paying us 100 at the end of each 5 years, or maybe we are paying at the end of each 5 years, whatever is the case. But we want to find out what is the value of all these payments, 5 individual payments as on today. So it will be less than 500. So present value of annuity, now we are talking about ordinary annuity. PMT is the payment of annuity. This is the annuity payment, which is $100 in this case. 1 minus 1 plus I raised to the power n divided by. So this is the formula that we can use to find out the present value of ordinary annuity. Now here PMT is $100. 1 minus 1 plus 0.10 is the rate of interest. N is 5 years divided by 0.10. So we have to solve this equation, this bracket first. We have to solve this bracket first. So once you solve this bracket, then you can multiply it with this 100. The answer would be 379.08. So the present value of annuity, an annuity which is paying $100 at the end of each year for 5 years, the present value of that annuity is 379.08. It can be interest, right? It can be return on investment. Return on investment.
That present value means the investment which you made?
No, what is the worth of that as on today's date? We have maybe
Yes, we earn $500, so today it could be $79.
Right.
This does mean this can you know.
If we are investing 100 rupees at the end of each year for next 5 years, we are not investing lump sum, because if it is lump sum, then it will be something else. हम ये कहते हैं 5 साल के बाद आप 500 रुपये जमा करते हैं, तो वो आपकी फ्यूचर वैल्यू हो जाएगी। अगर लमसम की बात करते हैं फिर वैल्यू डिफरेंट है, तो 500 अगर ये हम लमसम है तो ये कितना है
310.46. 310.46.
फिर कुछ और है, क्योंकि हम लमसम नहीं कर रहे, हम हर साल के बाद $100 जमा कर सकते हैं। तो जब हमें हर साल के बाद $100 मिल रहा है तो इकट्ठा नहीं मिल रहा, लमसम नहीं मिलता। 5 साल में मिलेगा, लेकिन 5 साल में वो 100 डिवाइड हो जाएगा हर साल के अंदर, तो उसकी जो प्रेजेंट वैल्यू है वो 30 है।
फॉर्मूले की बेसिस क्या है, मतलब कोई
डेरिवेशन
just to remember how it has evolved.
मतलब बेसिकली कोई कॉन्सेप्ट है कि नो कॉन्सेप्ट वही है, हम यही काम कर रहे हैं, इन सब की इंडिविजुअल प्रेजेंट वैल्यूज को ले रहे हैं और उसको ऐड अप कर रहे हैं, तो वो फॉर्मूला जो उसको सिंपली
So you also can see some time we are not able to relate it with the 500.
500 is
5 years का ordinary annuity plan आपका 500 basically 100 per month.
पर ईयर हो गया
379 का उसके साथ क्या रिलेशन?
नहीं, हम ये कह रहे हैं कि लेट्स सपोज हम किसी जगह पे इन्वेस्ट करने जाते हैं, हम या अभी हमने इन्वेस्ट किया है, वो कह रहे हैं कि हम आपको $100 देंगे एट द एंड ऑफ ईच ईयर फॉर नेक्स्ट 5 years। तो हम ये देखना चाह रहे हैं कि इसमें कितना मुझे इन्वेस्ट कितना करना चाहिए, एक्चुअली कितनी वर्थ क्या है इसकी। तो उसकी जो वर्थ है वो ये है आज की तारीख में, अगर मैं मेरे पास मतलब
$100 वो हमें दे रहे हैं और हम $379 उनको जमा कराएंगे, वो $100 को जमा करवाएंगे हर उसके
मतलब इसी तरह से अगर हम आज की तारीख में $379 दे रहे हैं तो हमें $100
करके 5 साल में
वापस
करेंगे। इससे बेहतर डील तो मैं स्टार्ट कर सकता हूँ, लेकिन इससे लो ना।
यस
मैं कुछ और समझ मेरे कहने का ये कि जो आपने अभी अपनी करंट इन्वेस्टमेंट की हुई है उसमें जो करंट डे में आपको प्रॉफिट है वो $379 है, 5 साल में $500
वो ये
ये
पॉइंट
इंटरप्रेट ये ठीक है कि 379 इज दी
अगर हमने आज देते हैं आज की तारीख में
$100 देते हैं तो $500 में
वो हमें हर साल के अंदर $100 देते हैं, तो ये 10% के हिसाब से हमें रिटर्न मिल रहा है। अब अगर मैं इससे बेहतर मुझे रिटर्न मिलता है तो आई शुड गो फॉर दैट, इससे नीचे नहीं जाना चाहिए। वो जो 500 वाली डील है उसकी वर्थ क्या है, वो ये आज की तारीख में, आज की तारीख में इतनी वैल्यू है और इस पे अगर रिटर्न 10% मिले तो अगले 5 years में मुझे हर साल के अंदर $100 करके वापस मिलेगा। और आमतौर से वो इंश्योरेंस इस तरह से है कॉन्सेप्ट कि वो
फ्यूचरिस्टिक वैल्यू दे दी ना, $500 at rate of 5 years by paying $100 per year.
they are paying us.
They are paying us. So we have to invest $379.08 with them in order to make it.
वैसे अदरवाइज 10% का तो रेट इस पे लगता जाएगा तो it makes the
Compounded है ना?
$30
Compounded. पहले साल आपने $100 वापस ले लिया, पीछे जो अमाउंट रहेगी आपके पास उसके ऊपर ये आता है एक्सपोनेंशियल है।
एक्चुअली इस तरह से हो जाएगी, वो कहेंगे हम आपके पहले साल 100 देंगे, दूसरे दोनों साल 50 देंगे,
अनइवन हो जाएगा वो आपका
अच्छा वो ऐसा है।
अनइवन कैश फ्लोज का रेट है, वो फिर आपको इसी मेथड से जाना पड़ेगा, इंडिविजुअली करना होगा। तो एनुइटी तब होगी जब इक्वल अमाउंट आपका इक्वल है, फिर तो ये फॉर्मूला लग जाएगा। एनुइटी की सूरत में ये फॉर्मूला लग जाएगा, लेकिन अगर वो डिफरेंट अमाउंट्स हैं तो ये फॉर्मूला फिर उसमें आप ये कर सकते हैं। अगर एक सर्टेन स्ट्रीम है, मतलब वो कहते हैं पहले साल 100 है, फिर 3 साल तक 300 है, फिर 100 है, अब वो 3 साल तक जो वो दे रहे हैं आपको 100 3 उसके लिए कर सकते हैं।
इसमें ये लिमिटेशन है कि इवैल्यूएशन टाइम के साथ इवैल्यू नहीं हो रहा, करेंसी है वो इवैल्यू नहीं हो रही, फिर भी आप करंट पोजीशन ठीक है।
नहीं हम वो देखते हैं 10% उसको आप ये उसी पॉइंट ऑफ व्यू से देखते हैं कि हमें क्या मिल रहा है एक्चुअली आज की तारीख में उसके साथ चलिए। अच्छा सेम अगर ये 5 years की है 10 years की एनुइटी थी तो फिर सेम हमने यही फॉर्मूला यूज करना था, एन की जगह 10 आ जाता, तो आपके पास वैल्यू जो है वो. So what if it were a 10-year annuity, a 25-year annuity, a perpetuity? Now 3 different options are there. 10 years annuity. In case of 10 years annuity, the value of n will change. It will be, instead of 5, it will be changed to 10, and the answer would be 614.46. If it is 25 years annuity, so this n will change to 25, and the value will be 907.70. Perpetuity is unlimited. Unlimited stream of income, or you can say forever. So in that case, we find out the present value by dividing the payment of whatever payment we are getting divided by rate of interest. So the payment is 100 at the end of each year, and the rate of interest is 10%. That gives us the present value of perpetuity equal to 1000. So these are the 3 different options.
In lump sum, we get $1,000 profit.
No, $1,000 you pay today and then you get $100 every year. For as long as you live.
That is correct.
ये जिस तरह वो banks वाले कहते हैं ना कि if you deposit 100 rupees every month for 5 years, when there was a scheme that you give 100 rupees every month for 5 years, then for the rest of your life you will get 100 rupees every month
As long as you live.
as long as you live. There was one scheme of some bank, याद नहीं किस बैंक का था, लेकिन इस तरह का था.
Most of the investments that we made today, they involve compound interest, not the simple interest. Because of this compounding, it makes a huge difference. So in this example, we can see what is the power of this compound interest. A 20-year-old student wants to save $3 a day for her retirement. Every day she places $3 in a drawer. At the end of the year, she invests the accumulated savings, that is $1,095. $3 per day into 365 days in a year, so it comes to $1,095 in a year. So it is she is placing that amount in a brokerage account, which with an expected annual return of 12%. How much money will she have when she is 65 years old? So now again, in this case, we want to find out the future value. Future value of annuity is, annuity is 1095, which is investment per year. 1095 is the investment per year, and that investment goes on okay. So formula for future value of annuity, if you want to find out the future value, so future value of annuity, in this case the annuity is 1095, the saving that the student is making at the end of each year. So 1095 per year is the amount of annuity. For how long she is going to do that? From the age of 20 to 65. So basically 45 years are there. And rate of interest is 12%. 1 plus 0.12. 45 minus 1 divided by 0.12. So if we solve this equation, the amounts comes to 1,487,261.89. So this is the power of compounding, that the amount which she is saving is 1095 for 45 years, so it should be somewhere around 45,000 ordinarily speaking, 45 amounts, 45 times she is going to deposit it. But because of compounding, what she will have at the end of 45 years is 1,487,261.89. ये फ्यूचर वैल्यू का, वो प्रेजेंट वैल्यू का था। वो हम ये देख रहे थे कि अगर साल के एंड पे मिल रहा है तो हमारी आज क्या वर्थ है। ये हम ये देख रहे हैं कि अगर हम if we are saving certain amount for a certain period of time, what lump sum amount we will have at the end of that period. So we are looking into the future.
That she is going to save for her grandchildren.
What?
That she is going to save for her
Grandchildren.
grandchildren.
Right.
No, but those 5 years she gets, she will have a hell of a lot of money with her. No, you don't know what money can do.
Okay, now if that was when she started saving at the age of 20 and she saved till 65 years of age. What if you don't start saving until you are 40 years old, how much will you have at 65? So let's suppose the saving starts at a later age, not at the age of 20, rather it is 20 at the age of 40. So the only thing that will change here is this n. Instead of 45, it is going to be 25. So if we change this n, 1095, 1 plus 0.12, 25 minus 1, 0.12. So the savings in this case are 1,46,000.59. So there is a difference of 1.3 million between these two. This was 1.4 million and this is just 146,000. So a difference of 1.3 million is there. So this is
जब साल में 1,95 रुपए जमा करा रहे हैं और आपको 20 साल बाद 1,40,000
कितने साल के बाद?
40 साल
25 साल के बाद एन इज 25। हाँ 25
साल के बाद आपको 1,40,000
हाँ 25 साल के बाद 12% के हिसाब से। तो
लेकिन आपको 12% कोई देगा भी नहीं, आपको 8% देगा। वो तो 8% भी कम होगी।
If you look at these insurance companies plan, वो इसी तरह से
मेरे
वो इसी तरह कि आप 10 साल तक तो कुछ नहीं, आपको ऐसे ही नजर आता है कि यार नहीं मिलेगा 10 साल के बाद। वो जब आप आगे जाते हैं फ्यूचर 15-16 years फिर इस तरह की कोई फिगर नजर आती है, फिर वो काफी एक्सपोनेंशियल आपको उसमें नजर आता है। तो बेसिकली इनकरेज आपको करते हैं कि आप लॉन्ग टर्म ही जमा करा देते हैं, वापसी करा देते हैं।
मैं इसलिए कह रहा था मेरे पास जमा करवा सकता है 25 साल में कौन सा करवा दें।
Insurance companies say you. Okay, how much must the 40-year-old deposit annually to catch the 20-year-old? So now the thing that we need to find out, in the same formula we can use, but the only thing that we need to find out is the amount of annuity. The same formula we can use, future value of annuities formula we can use. So we know that what we want to what we need to have, the future value that we need to have is 1.4876,262. That is the amount that we need to have at the end of the period. So future value we know. We want to find out this PMT, that is the annuity, how much the amount of saving should be, that we need to find out. And I remain the same, N is 25 years because this 40 years want to catch up with this 20 years kid, so he has only 25 years left at his disposal from 40 to 65, so N should be 25 minus 1, 0.12. So if we solve this for PMT, 1487262 divided by 133.33, so this is 11,154.42. So now the amount of saving should be 11,154.42. The 40-year person can catch up with the 20-year-old by depositing
$11,150
$11,150
per day
instead of $3 per day.
instead of $3.
So,
And then
now, what is the present value of uneven cash flow? Uneven cash flow, we can see the amount of that we are getting back is not evenly distributed. It is different. At the end of year 1, it is $100. At the end of year 2, it is $300. At the end of year 3, again it is $300. But at the end of year 4, it is negative $50. So there can be a negative cash flow. So in case of uneven cash flow, there is no shortcut. You have to go by calculating each cash flow's individual present value. So present value of 100 at the end of year 1 will be 90.91. Present value of 300 that we are getting at the end of year 2 is going to be 247.93, and the present value of 300 that we are going to get at the end of year 3 is going to be 225.39. Present value of negative 50 will be 34.15. So combined together, the present value of this uneven cash flow is $530.08. Okay, sometimes we can end up in a situation where the compounding is not annually, it is rather semi-annual compounding, right? The compounding takes place after 6 months, or it can be quarterly compounding. So the compounding takes place after every 3 months. Certain type of investments are there which in which the compounding can be semi-annual or it can be quarterly compounding. So what changes you need to make in the basic formula for compounding? If it is semi-annual compounding, if it is any compounding other than annual compounding. For annual compounding, the formula is, we have already discussed that future value is equal to present value 1 plus I raised to the power n. This is in case of annual compounding. But if it is semi-annual, compounding, then what we are going to do is 1 plus I, we have to divide this I by 2, because the interest rate will not be annual, it will be semi-annual, and the number of compoundings will be double into 2. So n will be multiplied by 2. If it is quarterly compounding, this I will be divided by 4 and n will multiply by 4. So that is the changes, that is the change that is required, because the compounding is taking place more than once in a year. So whatever is the number of that compounding, so you can say future value is equal to present value 1 plus I raised to the power divided by m, n into m. Now this m is the number of compounding. If it is semi-annual, this m will be equal to 2. If it is quarterly, this m is going to be equal to 4. So that is how you can calculate if there is certain investment in which compounding is something else other than annual compounding.
ये लास्ट लाइन की जो माइनस अमाउंट है ये माइनस 50 का क्या मतलब है? आपने पेमेंट खुद कर दी?
Maybe there can be a situation in which
maybe what you can do is identify annuity, जैसे यहाँ पे 2 साल में बन सकती है, वो इतनी बड़ी नहीं है, लेकिन अगर एक्सपोज अगर 3-4 साल आपको एक कांस्टेंट फिगर वैल्यू होती है 300
किसी भी टाइम पीरियड में हो सकता है, लेकिन ये कंसेक्टिव होनी चाहिए।
कंसेक्टिव होगा वैल्यू होगा 90 डेज में,
कोई भी वैल्यू चुनना
वो 4 कैलकुलेशन के लेकर आप ये कैलकुलेशन कर सकते हैं, पहले फ्रेंडली अगर और अगर आप सारे विजुअल कैलकुलेशन
अगर ग्रेजुअल इंक्रीज या डिक्रीज वाली फॉर्मूला है, उसका फॉर्मूला है
Sometimes we can end up in a situation where the compounding is not annually, it is rather semi-annual compounding, right? The compounding takes place after 6 months, or it can be quarterly compounding. So the compounding takes place after every 3 months. Certain type of investments are there which in which the compounding can be semi-annual or it can be quarterly compounding. So what changes you need to make in the basic formula for compounding? If it is semi-annual compounding, if it is any compounding other than annual compounding. For annual compounding, the formula is, we have already discussed that future value is equal to present value 1 plus I raised to the power n. This is in case of annual compounding. But if it is semi-annual, compounding, then what we are going to do is 1 plus I, we have to divide this I by 2 because the interest rate will not be annual, it will be semi-annual, and the number of compoundings will be double and will be multiplied by 2. If it is quarterly compounding, this I will be divided by 4 and will multiply by 2. So that is the changes, that is the change that is required because the compounding is taking place more than once in a year. So whatever is the number of that compounding. So you can say value is equal to present value 1 plus I raised to the power, divided by m and into m. Now this m is the number of compounding. If it is semi-annual, this m will be equal to 2. If it is quarterly, this m is going to be equal to 4. So that is how we can calculate if there is certain investment in which compounding is something else other than annual compounding.
Actually, last slide minus ये minus 50 का क्या मतलब है? आपने payment खुद करनी है?
Maybe there can be a situation in which first 3 years you are getting a payment and at the end of year 4 you are required to pay 50%. So then in that case, what will be the present value of that kind of investment? There can be a payment. Okay, what's the future value of a 3-year $100 annuity if the quoted interest rate is 10% compounded semi-annually? Now, this is an annuity, but it is paying you $100 at the end of each year, but the compounding is 10% semi-annually. So payment is annually, but compounding occurs every 6 months. How we are going to calculate this one? Okay, now you can see we have to modify the formula. Here we need to, at the end of the year 6 we are getting $100, so the future value of that will remain 100. The $100 that we are getting at the end of year 2, actually, and in that case, what we have done is we have taken 100 multiplied by 1.05 raised to the power 2, and that is. So semi-annual compounding, instead of 1 year, we are taking 2 ticks because each tick is taking place after 6 months. So 3 years were there, but you can see there the ticks, number of ticks is 6 in this case. So the future value here is different. It is 331.6.
But we can use the same formula, semi-annual.
Not this one, the other one. Future value of annuity. Formula for annuity. That formula you can use, but in this formula the modification will be required. Here you have to divide it by 2, and the number of period we have to multiply by 2 and again the rate of interest we have to divide by 2. So that formula we can use to find out this future value.
यहाँ पे फ्यूचर वैल्यू क्या होगी सर? 300 रुपये
331.80.
और पेमेंट फिर क्या होगी?
Payment is 100.
100.
No, in this case it is semi-annual, so it is going to be 50. The payment is going to be 50. Because 50 after every 6 months, it is not 100. So EMD is going to be 50 in this case.
Whatever it was written that payment will be annually.
Payment will be annually, but because compounding is semi-annual, so that we have to divide it.
The same thing will go for this semi-annual formula.
Right.
The PB will be off of what we have to get annually.
No, because this is lump sum. This is only one payment that we are going to get. This is the payment that we are going to make today, so it will make the same. But there it is payment after a certain period of time. So annually instead of 100, it will become 50 per 6 months.
This payment is not ठीक होगा तो आपका ये तो आपको वो अमाउंट रिटर्न कर रहे हैं सभी ने जन्म की वो अपन को $0.95 साल में जमा कराया है ये तो उसे मिल रहे हैं $100 $50 जमा तो नहीं करा रहा
अगर मिल भी रहे हैं तो उसको मिल रहे हैं साल के बाद आफ्टर 1 ईयर
पेमेंट में 50 पुट अप कर रहे हैं यहाँ पे तो जो अमाउंट्स ने इन्वेस्ट किया वो पुट अप करना चाहिए
इनिशियली तो नहीं हम तो ये माइंड आउट करना चाह रहे हैं कि ये जो $50 मिल रहे हैं $100 मिल रहे हैं एट द मनी है लेकिन उसमें कंपाउंडिंग जो सेमी एनुअल होगी ना 6 महीने के बाद कंपाउंडिंग होगी इसलिए इंस्टेड ऑफ टेकिंग 100 वी आर टेकिंग 50 बिकॉज ऑफ दैट एलिमेंट जो कंपाउंडिंग का एलिमेंट है एनुअल की वजह से सेमी एनुअल कंपाउंडिंग का एलिमेंट है उसमें इस वजह से वो अगर हम इसमें 100 लेंगे तो इसकी वैल्यू ज्यादा है
अभी अगर 50 पुट अप करें तो ये 321 आना चाहिए
अगर आप 100 डालेंगे तो वो ज्यादा है बिकॉज 600 कुछ है which is double of that double of that okay the last topic that we are going to discuss in this chapter is amortization loan amortization okay amortization tables are widely used for home mortgages auto loans business loans retirement plans etc best example would be when you go to lease a car. So what they do, they tell you that okay, this is you want to pay the price of the car in installments. So what are the number of installments that you choose? Whether you choose 36 installments or whether you choose 60 installments, that is up to you. So if you say I am willing to pay in 36 installments, so they will give you one amount, fixed amount. Okay, every month you have to pay maybe $25,000, 25,000 rupees every month. So at the end of 36 installments or at the end of 3 years, the whole amount is paid off. So that whole amount means it includes the cost of the car plus whatever the interest they are charging. So that loan is called amortized loan. That once you are paying that installment, it includes both elements. It includes your principal amount of loan plus it includes your interest as well. So these type of loans are commonly used in auto loans, mortgages, retirement plans.
सर इस फॉर्मूले से ये आंसर 331 नहीं आते ये 215 है 215 आता है putting 50 payment as 50
1 plus
0.1 over 0.05
0.05 and for 6 3 years 3 into 2 6 right 6 minus 1 0.05
ये IO2 टाइप ये सब 2 ऊपर चला जाएगा तो वो 50 की जगह 100 हो जाएगा IO2
sorry
2 ऊपर ले जाते हैं तो 100
340
331 निकाला 332 निकाला
मतलब ये प्रॉब्लम है वाला चीजें पूरी नहीं है
इसको
इसलिए we are putting around about 50
उसमें भी 100 आपको मिल रहा है एट द एंड ऑफ ईच ईयर फॉर नेक्स्ट 3 years. तो 100
लेकिन सर ये पेमेंट जिस तरह वो पहले वाले वो जो सेविंग वाले में जो हमने किया था उसमें पेमेंट व्हाट वैल्यू वी हैड पुट वाज व्हाट शी हैड इन्वेस्टेड इन द फर्स्ट ईयर and then we calculated the future value for 45 years.
हर साल 1095 हर साल
नहीं हर साल नहीं था
हर साल एनुअली 65 years एनुअली थी ना हर साल
लेकिन इधर तो अमाउंट नहीं है ना, शुरू वाले साल का अमाउंट नहीं है, वो तो
वो उस वाले जो सेविंग्स वाले जो 1095 वाले जो
वो पर ईयर एक तरफ नहीं
ये 1095 जो है ये उसकी सेविंग है जो हर साल दे
हर
रही है,
साल।
लेकिन इधर हर साल आप दे तो कुछ नहीं रहेगा, वो मिल रहा है $100 में,
हां
तो आपने 50 को प्रोडक्ट किया
साल, लेकिन उसमें कंपाउंडिंग किस तरह से है, मतलब एनुअल नहीं है
सर। ये तो इसने एक साल में इतना जमा करा है, एक साल इसने इतना जमा करा है एंड देन एनुअली उसका इंटरेस्ट आ रहा है।
एक साल नहीं है वो क्या ये $3 हर रोज जमा करेगी और
इन्वेस्ट सिर्फ एक साल
का शी इन्वेस्ट द एक्यूमुलेटेड सेविंग्स इन अ ब्रोकरेज अकाउंट।
ब्रोकरेज अकाउंट में चला गया आप का 1% कंपाउंड होता है
लाभ ठीक है उसमें
1095 first year she has deposited 1095 and then getting that 12% annual return for 45 years
निकलवाया कुछ नहीं
निकलवाया
45 साल तक वो खुल भी ना।
हां
that came out to be that 1.4 million या कुछ।
नहीं वैसा नहीं था, हमने उसमें फ्यूचर वैल्यू फैक्टर को पता लगा मींस 1095 पर ईयर वो बोलते हैं हर साल।
क्वेश्चन में वो एवरी ईयर का नहीं कह रहे,
एवरी डे आ गया
एवरी डे तो एक साल के लिए उसने कर दिया ना, एंड एक्यूमुलेटेड इन्वेस्टमेंट को उसने जमा करा दिया।
if she say begin saving today how much will she have, लेकिन हमने जो ये जो फिगर आ रहा है वो नॉर्मल से आता है नहीं है वो तो फिर आप ये कह रहे हैं कि फ्यूचर वैल्यू आप सिंपल फ्यूचर वैल्यू
मतलब फिर आपका प्रिंसिपल अमाउंट हो गई 1000 समथिंग ना और बाकी तो सिर्फ इंटरेस्ट लगता है।
1095 की आप बात कर रहे हैं 1 प्लस 0.12 या
या वो हर साल ये जमा कराएगी तो
वो हमने एनओटी कर रहा है
साल के बाद उसको कितना कर सकते हैं और जो जमा कराती रहेगी वो कंपाउंड ये माना जिस हमारा डीएस
ये रखा
कंपाउंड इंटरेस्ट
179,566
ये जो भी फंड ये हर साल ही जमा
हमने
कराएगी।
एनओटी कर रहा है उसमें लक्ष्य ये कि वो हर साल जमा करेगी 195 पर ईयर फॉर 45 इयर्स तो कितने पैसे इसमें जो है वो ये जो अभी हमारा ये वाला प्रॉब्लम है इसमें तो ये है 100 हानि future value of 3 year $100 annuity if the quoted interest rate is 10% compounded semi-annually. तो annuity जो $100 है 3 साल तक आपको $100 मिलने हैं at the end of each year. उसकी प्रेजेंट वैल्यू क्या होगी अगर ये कंपाउंडिंग सेमी-annual है। अगर आप इसमें 100 लेते हैं तो इसमें बहुत ज़्यादा है। इस 600 है।
इसमें 100 की पहले प्रेजेंट वैल्यू निकालनी चाहिए उसको इधर
इसमें प्रेजेंट वैल्यू तो कुछ नहीं है ना, इसमें तो प्रेजेंट वैल्यू कुछ भी नहीं है,
प्रेजेंट वैल्यू तो हमने निकाली है।
नहीं फ्यूचर वैल्यू निकालनी है। What is the future value of the 3 year?
ठीक है फ्यूचर वैल्यू निकालनी है राइट। तो प्रेजेंट वैल्यू कुछ नहीं।
प्रेजेंट
मान
वैल्यू
लीजिए $50 हमें जो मिल रहा है सॉरी $100 एट द एंड ऑफ ईच ईयर अगर ले सेमी एनुअल अमाउंट के साथ तो 3 साल के बाद हो गया तो फ्यूचर वैल्यू
साल में 2 पेमेंट
साल में 2 अलग कॉमन सेंस ये कहते हैं 300 से ज्यादा होना चाहिए 300 से कम होना चाहिए 100
वैल्यू सेम होनी चाहिए फॉर्मूला शुरू
हाँ
मेक सेंस
मेरे ख्याल में इस फॉर्मूले से आपने then you have to actually for each year आपको अलग-अलग निकालना पड़ेगा।
फिर वो उसने किया तो ये है कि उसने 2 साल की पेटी जोड़ ली 4
एक रिस्क हो सकता है कि ये जो उसने लास्ट ईयर लिया लास्ट में 50 मिल रहा है ठीक है लास्ट एंड ऑफ द ईयर 5 जो मिल रहा है उसको उसने एज अ 50 लिया उसकी फ्यूचर वैल्यू नहीं ली तो नंबर ऑफ कंपाउंडिंग अगर ये 5 मिले तो फिर अलग अलग हो जाएगा
पहले उसने 4 लिया फिर 2 लिए आगे देखें
हाँ उसने तो इंडिविजुअली कैलकुलेट किया
उसने तो हर साल के इंडिविजुअली कैलकुलेट किया।
ये फॉर्मूला नहीं है 100 जो आपको एंड ऑफ द ईयर मिल रहा है, नहीं 30 ईयर मिल रहा है, तो उसकी वैल्यू 100 ही होगी, क्योंकि वो तो आगे उस पर इंटरेस्ट नहीं लगा। लेकिन जो आपको दूसरे साल के अंदर मिल रहा है, उस पर 2 पीरियड्स सेमी एनुअल इंटरेस्ट के लग रहे हैं, और जो आपको फर्स्ट ईयर के अंदर मिल रहा है, उस पर 4 पीरियड है, तो उस इंडिविजुअल कैलकुलेशन
ये इसमें 2 वैल्यूज तीसरी वैल्यू को नहीं पहला 100 रहा, कंसिस्टेंट रहा,
वो आप
उसके बाद आखिरी 2 के ऊपर उसने बताया कि अगर ये n into 2 जो है सर, ये यहाँ पे n की वैल्यू जो है वो 2 होनी चाहिए।
पहले 2 हाफ्स का जो है ना, उसने 100 जब उसको हुआ तो उसके ऊपर उसने इंटरेस्ट लगा के 4 हाफ्स और नेक्स्ट 4 हाफ्स, इसलिए उसको ओवर रेट फॉर 4 कर देगा। ये भी लाइक दिस
नहीं पूरा
एक लेखा $100 पे 1.05 रेट फॉर 4, क्योंकि 4 हाफ्स है ना,
वो इधर से चल रहा है। फ्यूचर वैल्यू इसकी फ्यूचर वैल्यू क्या है, इसकी फ्यूचर वैल्यू क्यों नहीं, क्योंकि फिजिकल बैलेंस को इंटरेस्ट नहीं लगा। ये जो आपको यहाँ पे मिल रहा है, इस पे आगे 2 सेमी एनुअल इंटरेस्ट मिल रहे हैं आपको, उसके 2 इस पे 2 आगे है, और यहाँ पे जो आपको मिल रहा है, इस पे 1 2 3 4 सेमी एनुअल इंटरेस्ट लग रहा है उसमें इस वजह से। लेकिन ये तो होना ही फॉर्मूले से नहीं है,
लेकिन इस तरह की होगी, 2 के बाद तो वो उसमें ऐड हो जाएगा, तो उसका कंपाउंड इंटरेस्ट तो ये हो जाएगा, वो टोटल 200 पे लगेगा वाला, तो
हाँ
तो एक पे तो नहीं लगेगा।
नहीं, तो सर ऑलरेडी 4 पे कैलकुलेट कर चुके हैं ना।
सर ये जो उस अमाउंट में और जब उसमें ऐड कर लेंगे, उस अमाउंट में फर्क होगा। अभी आप $100 पे कर रहे हैं, जब 100 में ऐड हो जाएगा 200 पे 2 लगेगा, तो सेपरेट हो गए।
आप उसको 2 दफा तो उसके इंटरेस्ट नहीं लगा सकते ना। आप वो जो पहला वाला जो रेट फॉर 4 किया है, 4 हाफ इंटरेस्ट यूज करेंगे, लेकिन उसमें ऑलरेडी वो 4 जो
लेकिन 100 पे लगेगा सर,
1 है, तो आप
जो आखिरी 2 है वो 200 पे लगने चाहिए।
फिर आप ये करना चाहिए कि पहले को आप 2 पे करो, सिर्फ
पहले 2 पे कर दिया,
2 पे करो, उस पे कैलकुलेट करो, फिर नेक्स्ट को आप स्टैक प्लस 100 एंड रेस्ट फॉर करो, फिर ये सर
तब वो डिफरेंट नहीं हो जाएगा सर।
डिफरेंट हो जाएगा, थोड़ा सा फर्क आ जाएगा, थोड़ा सा फर्क आ जाएगा, डिफरेंट हो जाए तो सही है, थोड़ा सा फर्क आ जाएगा, राइट।
ये 31.80 और 340 का डिफरेंस है। ये मेरे हिसाब से 340 वाला ठीक है, क्योंकि फॉर्मूला ये कहता है फ्यूचर वैल्यू इसको इस तरह से कैलकुलेट करना है, क्योंकि एनुइटी है, एनुइटी में तो आपको एनुइटी को फॉर्मूले से कैलकुलेट करना चाहिए, अलग अलग करने की जरूरत नहीं बनती है, वो यही फॉर्मूला होता है फ्यूचर वैल्यू। And 2 is 3 years and 2 compounding money, 340 आता है। Next is for our purpose, annuity का we don't need to calculate individual amounts.
नहीं यार, इतना ही है, 331.80
वो शामिल हो जाता है।
नहीं यार, तब आप उस तरह का इसमें वही है।
Okay जी, amortized loans. Amortized loans are which you pay installments, and each installment includes your principal amount of loan plus the interest payment. So very commonly used now. For example, there is an example: construct an amortization schedule for $1,000 loan, 10% annual rate loan with 3 equal payments. So 1,000 is the amount of the loan. Rate of interest is 10%, and it is to be repaid in 3 equal payments. So we need to construct. First, we need to find out what will be the annual payment, what will be the amount of each payment. Because he has given us the loan of the amount of loan is 1,000, but the amount, the installment amount is not mentioned. So first thing that we need to find out in this case is the amount of installment. So that we can find out by using the formula of present value of ordinary annuity. Present value of ordinary annuity. Now, we have the amount of loan, which is present value of annuity 1000 is the amount of loan. We need to find out the monthly installment, which is the amount of annuity. EM we need to find out. Rest of the values are given. N is 3. Solving for EM3. So this loan requires annual installment of $402. So if we pay $402 each year for next 3 years, the whole amount of loan, which is $1,000, plus the interest will be repaid. So if you want to show the breakdown of each installment, so first thing, in a modernization loan, the first thing that we need to calculate is what is the amount of installment. As I mentioned in case of the car that you lease from the bank, what they do, they ask you the number of installments and how many installments you are willing to pay. So once you tell them the number of installments, then they give you the monthly installment. Okay, this is the amount of installment. If you say that I am willing to pay the whole amount in 36 installments, so they will give you one amount, okay, maybe 25,000 rupees per month you have to pay. After 36 months, you have to pay nothing, the whole amount is paid off. The cost of car plus the interest is paid off. So the amount of installment in this case is $402. Now, the table, modernization table. This modernization table shows the distribution of this amount, the distribution of each installment into what is the principal amount in that installment and what is the amount of interest included. So the table, modernization table, payment date, second is installment that you are going to pay, then interest, then reduction in principal amount, and last is the unpaid balance. So 5 column tables you can make to show the breakdown of each installment. Now, the unpaid balance in the start is 1,000 that we need to pay. The first installment that we are going to pay is 402. 402 is the amount of installment that we have already calculated. Now, this $402, it is comprised of 2 things. One is the interest which we are paying, and the other is how much we are paying towards the principal amount of the loan. So first we need to calculate the interest. 1,000, this amount of interest, 1,000 into 10%. 100. Right? Unpaid balance is 1,000, so 10% of 1,000 is 100. Now, reduction in principal. Reduction in principal, you can say this is column A, this is column B. This should be A minus B. So from this 402, we deduct 100, the remaining is 2. So once the first installment that we paid was $402. Out of this $402, 100 was interest, and the remaining 302 was the amount that was towards the principal amount, that was repayment of the loan. Now, what is the unpaid balance? How much balance is here? This 1,000 minus this 300. 600. So after one installment, our loan amount is brought down to 600. Now the second installment. Second installment, again we are paying same amount 402. The interest will be calculated on 69.8, so it should be 70. roughly. So 402 minus 70 is 332. And our unpaid balance 698 minus 332, 3636. So the third installment we are going to pay is 402 again. The interest would be 37. Principal amount 3336. So unpaid balance is 40. So this is how the amortization loans are paid off. Amortization table shows the distribution of each installment, breakdown of each installment into the interest and the principal. So the principal amount of loan was 1,000, which was paid in 3 installments of $400 each. So one thing we can note here is this interest will keep on decreasing with each payment of installment. Since the unpaid balance is decreasing, the amount of interest will keep on decreasing, and this contribution towards the principal amount will keep on increasing. So these two things will be there. One is the amount of interest. It has a decreasing trend because unpaid balance is decreasing, so the interest is decreasing. Whereas a reduction in principal amount has an increasing trend. With each installment, it will keep on increasing. That is the same table that we prepared. Interest rate decline for each payment as the balance decline. What are the tax implications of this? So obviously, if interest is decreasing, so the net income will increase and the tax will also increase.
Tax implications.
Tax rate can, what will the impact of that on tax? So obviously, if your interest is a tax deductible expenditure. So if it is decreasing, your net income will increase. So obviously, your tax will also increase. So this shows the same thing, that with each installment, our interest, the portion of interest is decreasing, whereas the portion of principal payments is increasing. Constant payment, because the monthly installment will remain the same, declining interest payments and the declining